Good morning, traders and investors. My name is Roger Scott. Today is the 15th of December. It's a Tuesday. What do I always say? Let's get into it right now. Now, I want to point out something really important to you guys. The stock market has been opening up bullish and settling weaker. Notice yesterday when I showed you the morning pre-open, we were up a bunch. Don't quote me, I don't remember the exact number, but we settled lower. The market actually ended up flat or actually negative yesterday. That's not a positive sign. And as you know, I believe the market is generally speaking overbought. There are some deals, there are some subsectors, and we're going to talk about that today. But as a general rule, I want you guys to keep this in mind. When the market opens really, really high and sags down, that's not a bullish market. When the market opens lower and then trends higher during the day, that's a true bull market. As a matter of fact, if you look at a classic bull run, you will notice that the markets open softer and then end higher. In a classic bear market, the market opens higher and then suckers in all the trades and then goes lower as the day, just like it did yesterday. So keep that in mind, and I'm noticing there's a little pattern of that right now. Markets opening higher and then going down. Now, in terms of the overall indices, the NASDAQ is up, the S&P's up, even the Russell is up. Not as much as I would like, but today, technology looks like it's leading again. Remember what I told you, there's going to be two themes. Stay at home, going back. Staying home, going back out. And you will see that theme based on the pre-open. So if you see the NASDAQ really, really strong and everything else kind of mild, that's a strong sign that's the case. So for example, the Dow is at 29,000, but it's only up 160, while the NASDAQ is only up at 12,000, which is 2.5 times less, or 2.25 times less, and it's up 74. So the NASDAQ is leading today, and that's telling us that the stay-at-home economy may be controlling today versus the looking forward to getting out and all that other good stuff. So remember, there's two themes to the market, and by looking at the morning, by seeing whether NASDAQ is strong or the S&P, the Dow, and the Russell are stronger than the NASDAQ, you're going to kind of get a good feel for what the market is imprinting today. Very, very important while we're still in this COVID-19 bubble. Now, in terms of market news, we've got industrial production today, and we have the start of the FOMC. Typically, usually, most of the time, when you have meetings begin, Fed meetings begin, that means the market is going to be subdued. So expect a little more random trading action, not as much volume, not as much volatility. Things can happen. I mean, earnings can intervene, but generally speaking, when you have FOMC, things begin to cool off till the meeting announcement is done. But in this case, we kind of know where things are going to end. The Fed made it very, 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 very clear that they're not going to raise rates for a long time. The only thing they may do is lower rates, but we're not going to go negative. So there's just not that much buffer room. And long-term rates have been telling us for a while that interest rates are not going to go higher. Long-term bonds are moving lower. So that means the interest rates are about as high as they're going to go. I don't think they're going to go higher right now. They're kind of holding steady right there. So that's telling us that things are stable. Tomorrow we have retail sales, and we have the Fed Chairman Conference, which is going to be the two big reports. Retail sales huge, as I mentioned yesterday. That's going to give us a good prognosis of whether we're going to have that end-of-year rally. So be very, very careful there. Now let's talk about global economy. Shares open higher in Europe on Tuesday, although again, lackluster day in Asia, as investors wait to see if Congress can break the logjam on delivering more aid to people, businesses, and so forth. It's like this, folks. Are we going to get aid, or are we going to get more COVID infections? Are we going to get aid and get out of this, or are we going to get more COVID infections? Markets are watching for the outcome of the Fed meetings, which ends tomorrow, begins today. That's what we were just talking about. So expect a little subdued market action in light of that, especially first half of the day. Prime Minister Yoshihide Suga, I hope I got it right, announced the suspension of a travel promotion program that has helped businesses but is also thought to have contributed to the resurgence of COVID-19. I'm telling you, folks, everybody's doing this right now. It's a balancing act in the world. China announced that it's Retail sales, industrial output, investment in factory outputs rose as expected in November. And we can see that because we're starting to not get as much of a logjam here in America with parts from China. So it looks like things are moving in the right direction, although Asia appears to be moved in a wait-and-see state ahead of the Federal Reserve, just like the rest of the world is right now. Americans began receiving the country's first vaccinations against COVID-19 on Monday, a process that's expected to take months. I'm going to read that again. A process that's expected to take months. Meanwhile, unemployment report is not on our side. So if the unemployment goes back to 1 million while we're waiting for the majority of people to get vaccine, we are screwed. So I'm telling you that again. And it's like it's a time thing right now. Is it going to be COVID or is it going to be recovery? Is it going to be COVID again, stay at home, or recovery? That's kind of where the market is at right now. Healthcare workers, nursing home residents, and people who have serious immune issues are the first line for shots. As far as crude oil, we're above the $42, $50, $43 frackers pay for a barrel of crude oil to begin processing it. So I believe there could be potential upside, but again, the long-term trend is favoring evergreen, non-traditional energy stocks, and I would be very, very cautious with crude oil. Now, as far as the overall stock market is concerned, I want to show you something interesting. When we look at the 10 cumulative sectors, and yes, I've been bearish on technology, broad-based technology, especially the NASDAQ 100 top stocks, the big cap stocks that like Amazon, Nvidia, the FANG stocks. I'm not really bullish on those stocks. But with that said, if you look at the industries, remember basic materials was near industrial, but now tech is back up. That's really, really important, and consumer discretionary is below it, which is not as important. But I'm going to explain to you why technology is up here. The reason technology's been up here is because technology has a very distinct subsector, and that's the semiconductor sector. And I told you about a week and a half ago that I'm seeing upside on the chip stocks. Chip stocks are like commodities. They beat to the rhythm of their own drummer, so to speak. They do their own thing. They're not as related to the Amazon, Facebook, Nvidia. Maybe Nvidia is more of a chip stock, but generally speaking, the FANG stocks kind of do their own thing, and they account for a huge market capitalization of the NASDAQ 100. But right now, I'm not seeing them move higher. Let me give you an example of what I'm talking about here. Let me just give you a good example. Here, if you look at Amazon, I think the best way to do it is just look at notice it's a weak buy now. Large cap tech has been faltering. See, notice it can't take out the September 2nd high. Nvidia, let's take a look. Having a trouble taking the September, and I warned everybody that till these stocks take out the September 2nd high, they are lagging behind the broad market. Meanwhile, look at the SOX index, or look at the this is the ETF. This is tradable. SMH. $ SOX is not tradable. SMH is tradable. And I've been telling a lot of my guys to get into this about the last 2 weeks. And I said this is going to continue outperforming the market because technology is one thing, but chip stocks are another. And you're going to need chip stocks regardless if we go back into the stay-at-home environment or if economy begins expanding, right? You can't do anything without semiconductors. It's like the heart of a person. It's like the mind. It's integral to the design of everything. So again, I like the semiconductors right now. Specifically semiconductors. Which semiconductors do I like? Why don't I show you some? Micron. I like Micron. I'm giving you the top relative strength semiconductors. Micron is looking really good right now. Really, really good. Notice it took out the September 2nd high. When the FANG stocks faltered, these stocks began going higher. How about Applied Material? So that's Micron. How about Applied Material? Made new high yesterday. And look at long-term chart. Look at that. Strong, right? How about Analog Devices? Another one. I like this stock. Made an all-time high or a swing high. 3 down days, closing higher again. Nice, right? So you've got the SMH if you want to trade the ETF. This is tradable. SMH is tradable. This is not. This is an index. The Philadelphia Semiconductor Index, $ SOX, but SMH is tradable, and they literally follow each other, as you could see here. Let me go to a daily chart. Also, they're not diverging. Higher highs, higher highs. They're overbought. There's no question about it, but they've come off. But they weren't diverging. They were more like the Russell. So we got Micron, AMAT, and Analog Devices, these three. All right. I like these three stocks. I think they're going to see more upside. And if not, they're at least going to be much more resilient than the traditional technology stocks. So I'm still kind of neutral on traditional tech, but I do like the semiconductor index because, again, they beat to their own drummers, so to speak. I think I said that. I'm saying that wrong. That phrase, beat the rhythm of their own drum. Whatever it is, you guys know what I'm talking about. The bottom line is Micron, AMAT, and ADI. And if you want to go with the ETF, which is not a bad idea, it's a great ETF, SMH. I talked about this about a week and a half, maybe 2 weeks ago. I lose track of time. But these have been outperforming the broad market, and this is what's causing technology to come back up. Now, before you go, I've got something urgent, important, relevant, something that can help you make some money, right? Who wouldn't want to make some money? I would. Everybody would. Ever wonder why Wall Street always seems to be one step ahead of the average Joe? I should ask one of my closest friends' name is Joe. I should ask Joe about this. Just kidding. But he's going to be over this weekend for a barbecue. I will ask him. But yeah, it always seems that Wall Street is one step ahead of the average Joe. It's because they have a ton of top secret trading strategies that give them an edge that no one else has. They're institutional traders, right? And while their methods are usually kept under lock and key, a former hedge funder insider, Lance Ippolito, he's decided to pull back the curtain on Wall Street's best kept strategy. Hey, somebody's got to do it, right? Lance is getting ready to reveal how tracking something called Shadow Blitz can help you predict which stocks are ready to explode. Who wouldn't love that? Handing you huge windfalls in as little as 24 hours. Folks, Lance is onto something. This Shadow Blitz can help you predict which stocks are ready to explode. Now, everybody wants to know which stocks are ready to explode higher, right? You got to check this out. He's a former hedge fund insider, and Lance knows his stuff. This guy really knows what he's talking about. Follow the link below so you can see Lance's discovery for yourself. Check this out. This Shadow Blitz is cool. Lance knows his stuff. He's an insider, and it's one of Wall Street's best kept secret. Stop getting stuck with these under lock and key systems that you can never figure out that hedge funds use. Follow Lance. Learn simple, basic, easy technique. These Shadow Blitzes are it. Follow the link below. Get in on this now. And leave me some comments. I want to know what you guys are thinking. Have a great day. Bye.